Hello, dollars. How are you all today? This is Dr. D coming back with you today. We have a special guest coming on today to talk to us about investing, talk to us about how to build generational wealth, how to leave a legacy for our families. And so we've been kind of trailing behind with that. But today we're going to come in, we're going to give you the exposure, we're going to drop some nuggets with you that you will not be able to pass by, okay? And then we want you to take them and be able to use them. So what we're going to do now, get ready, get your recorders ready, get your pen and your pad, get ready, and let's get it. Let's come in hot and heavy. So let's hit the ground running. Blessings. Hello, dollars. How are you today? So, we're back here today on this wonderful, thankful Thursday, right? So, today I have someone amazing because we're going to get into talking about how to be better with our finances, how to become, instead of being just consumers, that we become investors and also leaving a legacy for our children, also building generational wealth. And so, we have been kind of trailing that in that a little bit, but today we want to get on with you and drop you some great nuggets that you're going to be able to just go right on with. And so today I want to introduce to you the one and only MJ. The
Yes,
one and only MJ. How are you today, MJ?
I am amazing today. I am amazing, amazing. This is a really great Thursday. So I'm very honored that you asked me to be on the show and to share my knowledge and understanding. So thank you.
Well, I couldn't have did it without you because guess what? Let me tell y'all something about this lady here, this young lady. And see, I believe in, not just in my group. I reach back and I'm getting information that I can come and share with you. But I met MJ in 2023,
Yeah.
and we began to talk about finances and irrevocable trust and all of that, and how we needed to invest with myself and my husband, and how we wanted to change because it's never too late. So, see, that's what I'm saying. So,
Right.
it's never too late to jump in and dip your toe in and make sure you're doing some things that's going to build generational wealth. So, right now, I want Megan to come back with me. She's already here. She's going to tell us a little bit more about herself. So, Megan, let's hit that right now, and you just kind of tell what made you get into the field, um, all of that. But she's amazing,
Okay.
and even though I was slow, she stayed with because I know she probably wanted to sometimes just knock us in the head, but I'm glad you didn't do that. But thank you. But we finally came through, though, girl. We finally came through,
Yeah.
girl. We finally
Yeah.
came through. The
Yeah.
dials came through. Do you hear me? Okay. All right. Go ahead, Megan.
Well, I am a master wealth strategist. I am licensed in financial services via life insurance. So I have been licensed for several years now. And the reason why I initially got into the business is because I'm also a musical artist. And I moved away from home, wanted to find a way, how can I not go back into the corporate office? Because I
Hmm.
was working in corporate America and doing my music at the same time. And I was just talking casually to a gentleman and his wife, and I said, "Oh, what do you do for a living?" And he said, "Oh, I work in financial services." And so we started having a conversation, and I was attracted to the fact that I could be my own boss, make good money, and help people. And
That part.
as
Hmm.
I started studying the products and studying trust, studying alternative methods to helping people create wealth, it reminded me of my own personal story where, and I share this story on my social media,
Hmm.
where my mother had surgery when I was 14 years old, and it was brain surgery. She thought, "Hey, I'm going to be out for 6 weeks and I'll be back." Well, she had a stroke, and we didn't have living
Wow.
benefits. She did
Hmm.
not have an annuity or anything. She just had her 401k, and she trusted a family member with the 401k who invested the money in the stock market and it crashed. And so she lost all
Wow.
her retirement, she lost everything. And so at 15 years old, I had to go get a job, and different things like that. And so as I started learning about these products, that 14, 15-year-old girl started talking to me and saying, "Hey, what if we can save more people like mom?" And that
Mm-hmm.
save families from, showing them and educating them on how they can create safety nets for themselves and for their families. Because my mother didn't expect to have to forcibly retire due to illness. She did not. So, and she was still in her 50s. So she had not planned on retiring. And to understand that, hey, if she would have had this knowledge,
Mm-hmm.
because these products were around at that time, and if she had known that she could have safeguarded herself, then
Right.
been more income coming into the family. So a part of that, of my mission, is to reach as many families as I possibly can and to educate as many people as I can. And some people, just to help you be safeguarded for your future and for the present, right? And how can we not?
Absolutely. Mm-hmm. Okay,
So
so Megan, when you coming up like that, so that in itself was, I know, a traumatic experience, being 14 and then realizing at 15 you had to go get a job and to help out. So with that pushing you, and that's kind of that wind that's behind you, you just want to make sure that you could help as many families as you can.
yes,
Also, um all races and people of color. But what we have to really be truthful about, um, a lot of our people don't know.
yeah,
People of color, they don't understand the different annuities, what an IUL is. They don't understand all of that, and to be able to come in and help to give the exposure to
yes,
people of color, I think is amazing. And like I
yeah,
told you, what you do, I'm so proud of you, and I'm just glad that I met you,
yeah,
because even with meeting you, and that's why I say too, you never know who you're meeting, who you're talking to,
yeah,
right?
yeah,
Because I met her in a casual setting,
yeah,
but as we began to talk, then I realized this girl is dope, as they say. This girl got it going on. And
yeah,
so I knew then, and I was 60, 2 years young, and I knew then that you had something that I wanted, because I
mm,
wanted to even better myself, even though we have a pretty good portfolio. Praise, thank you, Jesus. But
yeah,
it's always where you can learn something. So, what I want to say to the audience tonight, don't think you have all the answers, but listen in, because this girl got something. She's coming batting 100.
yeah,
Okay, that's what she's doing. She's batting 100, and I
yeah,
want you all to be able to just jump in and don't think you're too old or too young.
right.
So, Megan, I know that you helped us with an IUL, so I really want to start there.
Okay.
Tell the audience, what is an IUL?
Well, an IUL is a permanent policy. So that means that you get coverage from the time you get the policy till the age of 121. So,
Mm,
with this policy, is cash accumulating. So, what does that mean when we talk about cash accumulation? It means that the premium, which is your payment, your monthly payment that
mhm,
you agreed to pay, part of that payment goes towards cost of insurance, some other fees that come along with it because it is cash accumulating, and the
mhm,
rest of it goes towards your cash value. And there is also a death benefit. So you leave legacy to your family. Now, the beautiful part of it is, we have
mhm.
variable products, which are like stock market products, your 401k. And what that means is you can get a lot of gains and then you can get a lot of losses, right? You never really
Absolutely.
you invest in the stock market, so you understand that, where you never really recover from a loss in the stock market. But with an IUL, what if there was a product where, hey, if the stock market goes down, like we just lost $4 trillion in the stock market over the course of 30 days this year in 2025.
Absolutely. You're right. You're
So,
right. Mhm.
so what if, so my clients that have their money in an IUL, well, they're not experiencing the same loss because an IUL has a zero floor. So your money is growing, mirroring the index, and it's increasing. But when there's a dip, there's a zero, there's a negative, your money is not affected by that. And so that's also the
Absolutely.
beauty of the product because there are so many safeguards with it. And I love it because you can borrow. This is one of those policies.
Well,
Now,
hold up just a minute. I want you to hold that part. But what I
okay,
want the audience is to really hear what she just said. And so what we want you to do is you're going to be covered, like you said, with insurance to your 121.
right?
That's what I picked up. That's a nugget. Also, she said that you can lessen your losses through IUL
Yep.
and not experience that. Then she just said another nugget she just dropped out of her mouth, and that was you can borrow against it. So,
Yes.
Megan, with you saying just that, what I want you to do is I know I told you to bring some screens so you can kind of begin to show them as we move along
Okay.
exactly what that is. And you can bring that up on your screen. And I think you can share it with me here as well. And so
Okay.
that way you can begin to walk them through because I learned by visual.
Okay.
So as you're talking about it, could you kind of break that down? Because I'm setting up a IUL as well with Megan. Now you might think, oh, Ms. Dr. D, why? Because I see where it's going to accumulate for me. So I'm thinking 15 years down the road, you know, 20 years down the road, that's what I'm thinking about. So
Right.
Megan, when you start talking about IULs, I really want to ask you what is the smallest amount? How can you set up on putting things in monthly, that kind of thing? So um, that the audience would understand and know that everybody can get in. You don't
Right.
have to have this amount of money and all that. So explain that too, because that's a nugget too. Because a lot of people think they got to have thousands of dollars before they can start something, and that's just not true.
Right. Well, one thing that I would say is it's like we talked about, there's a scale. And
Hmm.
so because the older we get, the more cost of insurance, right? So as
Yes.
you know, the older we get, the more insurance cost. So with an IUL, when I consult my clients and I talk to any coach, anyone through it, or teach anyone through it, I always say, okay, predicated upon your age, this is where you should start. And
Hmm.
also, it's about your age and it's about your vision. Okay,
Hmm.
what is your vision for the growth of the wealth? Because money needs a mission. It needs to
It
know
does.
where it's going, how it's going, and if you have a vision and a mission for your money, then you will stay committed. And those are some of the principles that I always tell my clients: vision, mission, commitment. That's what money needs, and that's what you'll get. Here is an example, and I blotted out the company of an illustration of an IUL for a 30-year-old client.
Hmm.
Um, this particular client, so at 30 years old, cost of insurance is not as high. And let's say you want to purchase a home. Most of the people that I work with utilize these to replace their IULs. So,
Hmm.
someone at the age of 30, I always advise start contributing between $300 and $500 at a minimum, right?
Uh-huh.
Because
Hmm.
the beauty of an IUL is contributions can be flexible. So with this particular illustration, I did it based on someone contributing $500, right?
Hmm.
And we started out at a $250,000 death benefit. Why?
Uh-huh.
Because the higher the death benefit, the more money you can contribute to it later on. So when I consult my clients, it's very important to understand this, because if you're dealing with an agent that is not integral and is more so about them making money, then they're going to give you a very high death benefit and say, okay, now you contribute $100, $200, and then you're not going to see your return. So,
That part.
right.
That part. Say that
So
again, Megan. Say that again, because
if
that happens a lot.
it
So
does,
you really have to do my 3 3, what I say, research, research, and research. But here today, I'm giving you somebody that's integral. And so you're gonna really need to get with Megan and get in there and get these things done. But go ahead, Megan. I love that.
yeah. So with a properly structured IUL, you'll be able to see growth fairly quickly, depending on what you're contributing to it. Okay. So with that being said, let's say this is a client who says, hey, by the age of 40, I want to purchase
Hmm.
a home, or I want to buy some land. Well, if we look down at the age of 40, there would be $53,000 for them here,
Uh-huh.
just by them paying a minimum of $500. Now, this is based on, hey, if the index only does 6%, but let's say the index does 8% or 9% or 10%, that number can be more. Now,
Wow.
I always say the amount that you initially commit to should be your minimum, because like you were talking about, how do we convert from being consumers, because black people are the number one consumers in America. That means that
It's
we
true.
are the ones that are buying the most, but yet
Come
we
on.
have the least when we
Hmm.
think about assets. That's what I'm talking about. So an insurance policy is just as important as your light bill. It's just as important as your car note. It's just as important as your rent or your mortgage. And why do I say that? Because this is a way for you to accumulate wealth. Also, notice I said at 40 years old, this 30-year-old can borrow from this policy. If you have
Hmm.
a 401k, if you have a 403b, you have an IRA, you have to pay 10% penalty on that when you borrow. Now, they will let you borrow from a 401k to purchase a home, right? But
Right.
if you want to buy a car? Well, the IUL gives you that flexibility to do that. What if you just want to pay off credit card debt? You can do that. And you would borrow from this policy. And when you borrow from the policy, the insurance company doesn't remove that from your cash value. So that $53,000, she's still
Hmm.
garnering compound interest on it. Okay. And how the insurance gets their company gets their money back is you can pay back the money in increments. I always tell my clients, make a plan to pay the money back that you borrow. Why? Because the more money you add to it, the more
That's
fuel
right.
you fire.
That's right.
So
Hmm.
you essentially become your own bank. This is what
Did
this
y'all hear that?
you
Did y'all hear that? You essentially become your own bank.
you
So
become.
you're using what you're putting in. Do y'all get it? You're
Yep.
using what you're putting in to help you also have a better quality of life, better
Yes.
way of circulating your money, and your money, you keep seeing it over and over again. Because once you spend has the end on it. We know about that, right, Megan?
Yes,
It's
you do.
gone. But if
Yep.
you are giving your money a mission, and you're circulating your money the way you should be, then it's going to keep coming back to you. So it's not a one and done. You can
Yes.
continue to see it go. That's what I
Yes.
love about it.
Definitely. And
Mhm.
then also the beautiful part of the product is this as well, is that if something happens to you, and let's say you have 20,000, 50,000, 100,000 in that cash value, and you have 300,000 as a death benefit, your family gets both. They don't get either or. They get both.
Wow. Say that again. I mean, girl, you are just coming in here hot and heavy, and you dropping nuggets, and you just dropping them and going right on. No, come back. Stay with that for a minute so they
Yep.
can hear that. Repeat that again. It's
Your
not either or. They said that one more time because I want her to say it again because she's telling you what it really is. And if
yeah.
you don't have this product, this is the product you need. Say it one
Yeah.
more time, MJ.
It is not either or. You get both the cash value and the death benefit for your family. So you utilize this product for children. Children can get insured as young as 15 days old. There's a book called
Wow.
what it's a book called What Would the Rockefellers Do? The Rockefeller family is the oldest family in America that
Teach
still
today, girl. Teach.
has billions of dollars that they give away in
Billion.
legacy through their trust to
Mhm.
the family members. How do they do that? Every single baby gets an insurance policy, not a term insurance policy, but a permanent life insurance policy
Wow.
accumulates cash value. So think about how many hundreds of Rockefellers have been birthed and born.
Wow.
And when those children become trust fund babies. So
Mm.
whenever that person dies, who gets the money? The trust, the family trust. And then those children can get 3 million or more dollars. So while we are sitting up here, I don't think it's anything wrong buying our children nice things and Jordans, but
Teach today.
an infant buying an infant a pair of Jordans that's gonna grow out of them in a couple of months,
Teach today.
and
Teach us today.
we can buy when we could take that money for those
Mm.
Jordans that they're gonna burn out of, they're gonna grow out of in a couple of months, and you could contribute that to an IUL as low as $50,
Woo.
$50 or $100, $100 a month.
Instead of taking that money and putting it as a consumer, because when you're doing that, you're just a consumer and you're a spender.
Right,
Because spending means that money is gone and it's dead.
gone.
It's not coming back because we done paid it to either to Nike or whoever. And don't get me wrong, it's like Megan and I are saying. We're just saying we want to give you some nuggets and we
Yeah,
want to expose you so you can start buying legacy. And that
yes,
way you can leave a generational wealth for your family. It's a
yes,
no-brainer. And we got to get better with this because we're great people. We have such wisdom and knowledge, but we got to get in and start changing how we see things,
yeah,
how we do things. And
yeah,
so now y'all know why I was talking to her, don't you? They know why I was talking to you now, don't they? They know why I was talking to you now. Because
yeah,
I knew when she opened her mouth and started talking about that, I said, okay, this
yeah.
girl got it going on and she knows her stuff. Keep on going with it, girl, because I'm here to stay. You know what I'm saying? Keep
Yes,
going.
yes. And
Hmm.
one thing I wanted to share is that is very important because I'm also a money mindset coach. And one thing that I can say is it's very important for us to garner the mindset that goes along with the mission, right?
Ooh,
And so a
yes,
lot of us
ma'am.
are carrying, a lot of us are dealing with a lot of money trauma, right? We deal with that money
Hmm.
of, I know what it's like to watch a family member write a bad check, and that programs us to think that we can write bad checks, or we can be okay with those negatives in our bank accounts, and that it's okay for us to buy vehicles and cars that we cannot really afford just because they say that the bank says we'll loan you 350,000 for that house, but can you really, 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 is that going to be the best for you, right? And
Oh,
so,
wow.
the mindset, when we live above our means, it's really us internally saying, I am not enough. So I have to
Yep.
buy as much stuff as
All this stuff. We got to buy
right.
all this stuff to make myself feel like I am enough. And you
Yes,
are enough. And you really
right,
are enough without the stuff. And just like she
right.
said, we can do things and you can have things, and we're not saying not to. But what we're
Yes,
saying is going past your limit. We're
yes,
also saying, okay, so if I'm going to go and drop $3,000 on a bag. And don't get me wrong, because I like bags now, but
Right.
don't get me wrong. But I'm going to drop that and I don't even have that in a savings account. Now,
Right.
does that really make sense?
Right.
It
Yep.
don't. It doesn't make sense. And we have to become, instead of consumers, we got to be investing in ourselves, in
Yeah.
our future, into our children. And we have to leave more to our children than just debt or nothing at all. Did you
Yeah.
just hear what she said about the Rockefeller babies? And when she told me about that, I was like, girl, what? I had heard about the Rockefellers, but I had not went as deep as Megan had. So that's what
Right.
I'm saying. Turn your listening ears on, because she's dropping some nuggets here tonight.
Yes. And one thing that we discussed was the annuity, an equity indexed annuity. And so what that is, think about your 401k, your IRAs. It's the cousin to those products. And the difference with an equity indexed annuity is that there also is no market loss. So you have a zero floor. Now, like I said earlier, stock market has lost $4 trillion. And how many phone calls have I got in the past 2 weeks of people saying, what is that product that you're talking about on your social media that can save my money? Because I just lost 10,000. I just lost 5,000.
You're telling the truth. Yes.
And I'm going to be now working until 70 when I was going to retire at 60. And so this is a product that you can roll over your money into. Doesn't cost you a thing but your time. Fill out an application, and then there is a approval process. Once you get approved, you roll the money over. Okay. And this product safeguards you. Again, your money is growing with compound interest, and you can allow the money to sit. You don't even have to contribute to it, depending on the amount that you're rolling over.
Okay,
And
now Megan, hold that right there. Hold that for a second. Excuse me. Okay, so if someone wanted to do that, tell us how much could they just sit there, and just kind of let it grow. What would be that amount that they could just put in there and sit there? Then I have another question for you too. Go
okay,
ahead.
all right. So there are some companies that will take amounts as low as $5,000, and then, but most companies won't take anything less than 10. So, so you can roll over any amount. I just did a rollover a couple of weeks ago for a 24-year-old who was switching jobs, and so he had $19,000 in his old 401k. So we rolled that over into an annuity, and then I had a 60-year-old who had $100,000. I've had a 50-year-old. 60,000. So it could be any amount. It could be $2 million. It could be $3 million. People, outside of just rolling over 401k and IRA, and something I want to make a note of: if you have a Roth product, a Roth IRA, a Roth 401k, it actually, the annuity will absorb the same tax advantage traits as your Roth. So that means you roll over into that annuity. Now you have a Roth annuity. So you still can, that money's still going to grow tax free. You could touch it after 59 and a half. What you get from it will be tax free. So you still have those same attributes and advantages. Okay. You don't lose that. The only difference is your money is not susceptible to loss with the product.
Awesome. Now, one other question I want to ask you, because I'm really asking this for people in their 20s. So, say I'm a 21-year-old, I am working, and tell me what I can contribute to something like this. So when I'm 30 or 35 and I want to buy this home, 10 years from now, I want to buy this home. Tell me how it would work for me for a 21-year-old in putting in, and how much should I be putting in monthly contributing? And how can I make that happen? And then, like, we're still in income tax, Megan, time, and people are receiving their income tax refunds. So that's that extra money that you want to take and not spend You heard what I said again, spin, because it's gone.
Right.
We want to take that and circulate that, give it
Yes.
another mission, and
Yep.
say, hey, I'm going to take 2,000 and that's what I'm going to be doing. I'm going to dump that into that account. And that's how I'm going to do it. Tell me how I could do that from a 24, 21-year-old.
So for a 21-year-old who's starting fresh and saying, hey, in the next 10 years or more, I want to purchase a home, I would teach them about, consult them on the IUL, because they can,
Mm-hmm.
with an IUL, you can touch it at any time as long as there's cash value there. So an
Right.
annuity is a true retirement vehicle where you can't touch that until 59 and a half. Okay, just like
Okay.
your traditional 401k and things of that nature. Now, how much would they contribute? Well, that would be something where if the mission is, hey, I want to purchase a home, then I would say, okay, how much do you want to see in that cash value?
Mm-hmm.
And I would personally, it's a case by case basis, right? Because
Right.
then we need to talk about, what are your habits looking like? Where's your money going? For example, I had a client who I sat down with a couple of months ago. She told me she only had $150 to contribute to an IUL. And I said, well,
Mm-hmm.
wait a minute. You just told me that your daddy gave you that house. You ain't got no mortgage. So where's the money going? And by the time
My,
we were,
my, my.
so after 45 minutes, there was $3,600 that she was spending.
Wow.
She was eating out every day. She was buying, spending money on buying them $3,000 purses, 900. I said, how much are your purses? How much are this? And all these things, wigs, units, nails, all
Oh
this
my
kind
God.
of,
Yes,
but
Lord. Come on.
by the time
Tell
we
us.
got the
Teach us.
conversation, she was like, oh my God, I didn't even realize. And so now she's cooking. She eats out once a week. And because did not have, she realized her habits were intruding on her future. And so we rearranged those things. And so now she's
That's
committed
another
to
nugget.
the
That's
process.
another nugget you just dropped. Girl, you just dropping, they just falling out your mouth. But you got to back up. Back up. Megan, say that what she was spending, repeat that. It was doing what to her future? Say that one more time.
It
Because I want
was
the audience to hear that.
it was impeding on her future. It was stopping. She didn't have savings. She didn't have retirement. Everything was going towards her now, or how she felt, right? And
Mm.
so again, then we have to go into the mindset of, why do you feel the need to get a new purse? What are we feeding there? Right? And so that's where the mindset coaching goes into what I do as well. And so in talking to her, she realized, oh, I don't need anything.
My,
I
my,
am
my.
fine. But
I
I do,
love that.
but I
I
do
love
need
that.
retirement. I do not
Mm.
have a policy. I have children. What? Okay. So then it was like, okay, now let's change this conversation, because she had to look and see when we put the numbers before her, and then she realized, oh my gosh, I am, I'm stopping myself. I don't need another
In
job.
other words, she was her own worst enemy and didn't even know it.
Right,
She was getting robbed, but she was the robber.
right. She was
She
robbing
was
herself.
robbing from her future.
Yep.
She
She was,
was the robber. You know how we have somebody come in and steal stuff?
yep.
Girl, that's deep right there. You can be the robber of your own
You could be
self.
your own thief. Yep.
Wow. Ooh. Okay, now what I want to hit on before we get ready to kind of wrap up, because there's so much, and we're gonna have to have this amazing person back. MJ is gonna have to come back because we're gonna have to do a part two. But what I wanted you to also talk about is trauma with the money and how you are the coach now. Because I want people to get coached by you. Listen, you would be doing yourself a good service for longevity and how long you're going to be going forward. And she's going to tell you how she coaches you with your mindset. Because, see, if you don't change the habit or
Yeah.
you don't clear your lens and look again, and you don't get exposure where you can see where you're actually doing something wrong, then you're going to keep doing the same thing. And to
Yeah.
keep doing the same thing is insanity.
Yeah.
Okay? It's
Yeah.
actually insanity. And
It
you
is.
don't even know. You just run around doing stuff and it's insanity. Okay, so Megan, tell them about that. Tell them about you coaching and changing the mindset, because some people may need to do that prior to taking out a policy or IUL and all of that. Tell them about that, because you want to help them to get better with that and learn what money is. So tell them about that as
So
well.
one thing I'll say is I can't talk about that without talking about my own personal story. And when I realized that I kept trying to figure out, why is all this money coming in, but at the end of the day, I'm still at zero. I know we
My,
joke and
my, my.
it, but I had to sit with myself and say,
Mhm.
why is this happening to me? Wait a minute. I'm talking to people about money. I'm talking to people with millions of dollars. Why at the end of the day is my bank account still at zero? And so
Hmm.
because of their therapy in my personal life, I had to start
Mhm.
asking myself, where did this begin? And what my eyes were open to is that I didn't like looking at my bills. I didn't like opening those envelopes. So I
Girl.
had to ask myself,
Woo.
why do you not like opening the bill? Why do you not like opening the envelope? Why do you avoid it? And I had to go back to childhood and look at my examples and realize that I did not have great examples around me of people who understood and knew money. And then when we are in this, you and I are in this coaching community where we are taught
Mhm.
that money is us, that we are the money. So when
Come
I
on.
when I realized I am the money, so wait a minute, let me ask me what's wrong. Let me open that door. And so as I had started walking through it within myself, and then as I started talking to people, I had to turn clients away, like you said. So I had to turn clients away and say, you're not ready. You're not ready for this
Mhm.
product. You're not ready for this. And
You
I'm
got to do the homework.
not, and
Mhm.
I'm
That
talking.
introspection, that reflection on how you doing. And even with you saying that, Megan, within the last 6 or 7 months
Yeah.
for me, I had to pivot and do that pendulum shift where
Yep.
I shifted because I've always wanted to be a global investor. I wanted to invest in Africa. I wanted to do other things. But I had to make that pivot shift and say, okay, hey, Constance, Dr. D, you got to roll this thing back.
Yeah.
So all the vacation, different things I was doing, they wasn't bad. But if I wanted to reach this goal,
Yes.
I had to change my habits
Yes.
again, which
Yeah.
I've done well, and I thank Father God. But I also thank Father God for giving me more information so I know what else that I can do,
Yeah.
because we only can limit ourselves.
Yes.
Okay.
Right.
And I'm not gonna be the one that keep on saying that's what I want to, because fitting to don't never get nothing done. Okay.
Right.
Well, I'm fitting to do this. I'm fitting to do that.
Right.
Fitting, you ain't never fitting to do nothing.
Nothing.
Okay. Because fitting to don't never get nothing done. But
Right.
when I was willing to pull back and say, okay, this is what I'm doing, and this is how I want to move, and this is what I want to leave as a legacy, I'm
Yeah.
buying legacy. I'm
Yeah.
not buying bling. I'm not buying a Prada bag. I'm finna buy legacy and build more generational wealth that's going to be going for years and years, and starting with the irrevocable trust that I'm doing with Megan as well. It has set me on a whole trajectory change in my life.
Yes.
Okay. So that
Yeah.
I'll be able to do things and lead things, and my kids and grandkids and great great grands down to the seventh generation be
Right.
talking about
Right.
what Dr. D and Michael Dow did. Sir
Yeah.
Michael.
Yes.
Absolutely.
And with the coaching program, what I help people to discover is your why, and how can
Hmm.
we create better habits, And how can, because some people can do this on their own and some people cannot, right? And
It's
so
true.
where is the hole that we can fill? And what services can I offer to help you get to that next level in your mindset concerning money? And a lot of times the shift, we think that it is the money that is lacking, but it is not.
It's
Oftentimes
not.
it's our self-esteem. Oftentimes it is our, sense of self-worth. Oftentimes it is because we look outward instead of inward for our
Ooh,
value and understanding. But we don't realize that if my mind is a mess, my money always going to be a mess. If I am disheveled internally, then my money is going to be disheveled internally. And I think that it is harder for a person who has money to deal with their internal, right? Than it is
uh-huh.
for a person who may not have it physically yet, right? Because
Yes.
imagine a millionaire trying now I got to go deal with my daddy issues. What? You
Come
know,
on.
but that may be the requirement. So I'm saying this because you may think because you have a lot of money in your bank account, you ain't got nothing to work on. But you do, because you're always sitting at that place of a six-figure, seven-figure person, and you're supposed to be 8 and 9. But the
Woo.
reason why you're
Teach
not
today.
9,
Teach today.
because you still got mother wounds and you still have father things that you need to deal with. You still ain't forgave. You still haven't
Ah,
gotten over
yeah.
things. So
Don't start preaching that, because girl, I'm gonna get up and start running around here in a few minutes.
but it's serious, and it keeps you
It's
at
true.
that
It's
certain level,
true.
and
It's so true.
you won't get
Yes,
past it. You won't get past it until you deal with those things. And so this is what I offer to people. I offer to people hope, to let you
hmm,
know that you do not have to stay in this cycle, that there is a way to break it, but you just have to be willing to do the work. And I'm here to help you mentally get there.
absolutely,
Mhm.
absolutely. Megan, and we're gonna put all of Megan's information in the drop on this, and then we want you to start somewhere with this.
Yeah,
So
yeah,
when we're airing this, I'm all about empowerment, enlightenment, encouragement, and
yeah.
I sometimes feel like if you don't have the exposure to things, then you can't
Yes,
really change. And I
yes.
think now we have given you the exposure. And so we may need to come on. We're gonna have to come on again, because I want us to get a little bit in depth, because we giving you a little of this for you to eat off of right now. But
Yeah,
guess what? There's more to come. But I want you to follow her on her page. And I want you to even think about getting into her money coaching. Because even though she was talking with my husband and I, Megan was, girl, the girl is bad to the bone. You are a beast.
thank
Okay, when it comes down to this money thing, girl, you are a master. You understand? You're the truth. Y'all know
thank
how y'all say out in the streets, the truth. She's the truth, and she even enlightened me. She didn't know that what she was doing, but some of the stuff she was telling me, I was like, what,
you.
what? And some of it I didn't even know.
Yeah,
It made me say, Dr. Dow, do you understand what this is? What? And I didn't. So we all can learn something.
yeah,
Always be pliable. Always be ready to learn. Always have an open ear for listening.
yeah,
We listen at a lot of things, but this right here, while you're strolling on IG and TikTok and all that, stroll on to Mega and
yeah,
get some real something that gonna help you. Stroll on to Dr. D so we can help y'all, and that
yeah,
you're using that social media to help you grow. I
yeah,
mean, who wants to laugh? I want to laugh too. But do you want to laugh all the time and you're not making no money? You're not doing anything. You're not progressing. That stuff is good and all that. That's fine. But what we're saying, make sure you utilize the tools that you have. This
yeah,
phone, make sure you make the phone work for you. You're getting
yeah,
some knowledge, some wisdom somewhere with it.
yes,
Right, Megan?
yes. I agree. I totally agree. Thank you so much.
So I want to thank you for coming and being on here with me. And Lord knows you don't work with us, child. We don't even want to go to that. Girl, you have worked with us, and I'm telling you, even though she's not in your state, Megan is so timely. She's easy to work with. She's understanding, and I love the way she talks. And y'all, I'm gonna tell you, this girl can sing. Oh, oh my God, Megan. I don't want to put you on the spot, but when I tell you this girl can sing, I ain't to my sing. You know how we say it, right? She
Yes.
can sing. Megan, give me something. I mean, just off the top before we close out, just give me something because I love to hear her sing. Her voice is amazing, absolutely amazing. Can you give me something?
Okay. Okay. I will love you anyway, even if you cannot stay. I think you are the one for me. Here's where you ought to be. I just wanna satisfy you, 'cause you're not mine, I can't deny it. Don't you hear me talking, baby? Love me now or I'll go crazy. Oh, sweet thing. Don't you know you're my everything? Whoa, sweet thing. Don't you know you're my everything?
Woo! Yes. Yes. Girl, don't make me. Oh, yes. Yes. I love it. Thank you so much. And you know, you got to be bad to just hit it off the top like that, right, y'all? Y'all know that, right? But I do want you all to follow her. Everything's going to be in the Dropbox with her. And when I tell you, everyone that I'm bringing on here, they have been vetted, they know their stuff. And I'm telling you, when I drop with someone, I'm telling you, they know what they're talking about. And we're so glad that you dropped in with us today
Thank you
on
so much.
Dialing with Dr. D on this thankful, blessed Thursday. So you
Yes,
all have a blessed evening. Enjoy yourselves. And don't forget about managing that money and getting
yes,
yourself back into the right thing.
yes.
Okay? Blessings.
Bye.
Bye.